Hey everyone, I'm Butani from Private Lender Lic. We're at the California Mortgage Association's fall seminar in Las Vegas, and I'm joined by Mark Atalla from Carlyle Capital. So Mark,
hi everybody.
Thanks for joining us.
Could
you just tell us a little bit about Carlyle Capital?
Yeah, we are a private lender. We're a bridge lender licensed in 48 states. We do residential bridge financing, commercial bridge financing, usually 1 to 2 year terms, and just help people bridge the gap that they're in to where they need to go.
Nice. And what about loan amounts? What's your general?
If it makes sense, we'll look at it. I want to say we like to stick to anywhere between 25 and below. Anything usually over that is a little tricky.
Okay.
But
25 million?
Correct.
Okay.
Yes.
All right.
Yeah. Now 25,000.
So you even do some larger commercial
We do.
loans?
Yes.
Okay.
Yeah.
All right. And how much of your business is California versus other states?
I want to say about at least half our businesses in our market, right, in California. But we do 48 states. We do a lot of states.
Nice. And then so you're one of the exhibitors, sponsors at this California Mortgage Association event.
Yeah.
Why do you come to this event, and what do you get out of the CMA?
It's nice because you get to see the trends in the market. You get to see fellow lenders and friends of yours that you've known for years in this business, and kind of the changes that they're seeing in the market, and you're able to share the changes that you get to see in the market too, right? Because something that you may see may be something a little bit different than we see. So it's always nice to meet up and talk about it.
Yeah. And do you also get some deal flow out of?
Of course, absolutely. Yeah, absolutely.
Do you attend any of the educational seminars?
Of course, you have to.
Okay.
Yeah, I mean that little roundabout the other day was awesome. That was cool. Just kind of
table.
Yeah. That was very nice, very innovative.
Nice.
But that's what it is. It's nice to sit there and talk about different ideas and different structures and problems that you're facing that you can help maybe somebody else kind of overcome, and vice versa.
Yeah. And so speaking of collaborating with other lenders, what are some of the changes that are happening in the market?
We're definitely seeing a slowdown, I think, in values for sure, way more than they were 2-3 years ago, especially on the higher end stuff. Values are getting cut tremendously, and even on the lower end stuff too, it is getting cut. But I think we're being a lot more conservative than we were, kind of 2 years ago, because you're kind of not able to forecast the future, so it makes you a little bit nervous, right?
Yeah, and so what are the majority of your loans? Are they bridge? Are they rehab? Are they value add?
We're still doing the majority of everything that we're doing is really bridge. We do some value add. We are really kind of staying away from construction. Anything ground up is a little bit difficult for us, to be honest with you. But we like the short term, and we love the fix and flip model, easy in, easy out. 12, 18, 24 months on a very long rehab. So, obviously with experience, it makes things a lot easier. Guys are always going to be still buying and selling and finding opportunities for themselves.
And how about portfolios of rental homes? Is that a product?
That's kind of a niche, product that we're starting to offer. We're seeing a lot more of it. A lot of our investors that we see that want to come borrow from us are trying to expand their portfolios, and, we're starting to offer a longer term product to be able to give them that. We're able to offer them a little bit more cash than, most institutions that they're used to going to. And the cost of capital is, it's close. It's much closer than it would be at the bank, so they're coming a lot more to us than they are now.
And what are the terms? What's the minimum maximum term?
It depends. I mean, we have a 5-year product. We have a 30-year product. It really just depends on, states, because we're doing this kind of nationwide, so it gets a little bit tricky. But every situation's, a little bit different.
What's the largest portfolio that you've done?
We're closing one right now that's about $8.5 million. We're working on another one right now that's about 15 and a quarter.
How many properties does that include?
120.
Wow.
Actually, and that's actually here in Nevada, actually.
So just all single-family rental homes?
Mm-hmm.
Okay.
Yeah.
Interesting.
Yeah. It is, man. It's nice because a lot of these people saw the opportunity in the downturn. I don't know if you remember, but 2009, 2010, where you were picking up properties out here in Nevada for next to nothing, and now they've, tripled in values. And if you're renting them out, it's good.
Yeah.
It's great cash flow.
And then, so these investors that are getting portfolio loans from you, are they just getting it for a few more years, or are they looking at this as a longer term solution?
I think a longer
refinance or cash out.
Yeah, I think a longer term solution. I think a lot of them are maybe putting some of the money back into the properties, but what they're really trying to do is really expand their portfolios, since it's kind of worked out so well for them, right? And it's great. Because you've got an asset that you can always sell, hopefully it goes up in value. Even if it goes down, you're still cash flowing every month. So
Yeah. And what are the typical maximum loan to values on those?
On those, I mean, we want to stick right around 65, 70 if we're really like the asset class. It just depends on where, to be honest with you. But yeah, I would say anywhere between 65 to 70 for sure.
All right. Nice. Excellent.
Yeah.
Well, cool. Well, thanks for stopping by.
Of course, yeah. Thank you for having me. It's always good to see you.
Thanks for supporting the organization.
Of course,
All right.
always.